Good morning. What's up, guys? Happy Thursday. Hope you're all having a good morning here thus far. Let's get down to business first, as is typical around here. So, got a few things to talk about first. First of all, let's go through the news. So, as far as news, here's what we got. We're looking at, of course, we got U.S. initial jobless claims here at 7:30. So that already hit. Market is open, has been open for about a minute and a half here. At 8:45, we'll get the U.S. S&P Services PMI flash. Also at 8:45, we'll get the U.S. S&P Manufacturing PMI flash. That'll move the S&Ps a little bit. So it'll move the Nasdaq a little bit by default. Probably nothing crazy. But then at 9 o'clock, we get, this is all Central Time, by the way, we get U.S. existing home sales. Okay, that'll move things maybe a little bit, not much. Not much. The volatility will be dead within 30 to 60 seconds off of pretty much all these news events. U.S. initial jobless was the biggest one that we got so far here today, and that hit an hour ago. So we're good. At noon, we get a White House press briefing. Fed speaker, 1 o'clock, and Trump later on this afternoon. So the afternoon has maybe some potential little landmines sitting in there with some tariff talks. We'll see. But in the morning, we're pretty free and clear, except for 8:45 and 9, which shouldn't be all that crazy to begin with. How you guys doing? Good morning. John, first day with Take Profit Trader. Let's go. Josh, Keith, Rick, Trading Chris. Good morning. Welcome back, you guys. How you doing? Dips and Peaks, John B. Pat, what's up, guys? Mio. All right, let's talk a little market inertia, okay? So, this is the daily chart, and this shows only the New York. That would increase volatility to a degree. That would be nice to see. But if we're going to break 21.5, I got to tell you, I'm a little bit sick of hanging out right at 21.4, 21.5, trying to break it, but failing. So, you know, a pullback here today would be great. It's kind of a band-aid because we'll eventually have to face 21.5 anyway. However, you could say that about a lot of levels. So I'm cool either way. What I just don't want to see today is a pop up to 21.5 and then we get stuck there. But there's hundreds of points between here and there anyway, so not too bad. Yesterday's big downside push in the afternoon, did you guys do okay on that, or did you guys end up, I know some people probably got sliced up. Other people probably made a killing. How'd you guys do on that? That was quite the move there yesterday. Marshall, Chris K. Higher high. Aaron, what's up, guys? Scooby-Doo, welcome back. Jude, good morning from Mexico. Nina, how we doing? Jared, good morning. Chris Castle, what's up? Neil, wrongly reddish, welcome back, guys. How we doing? Trading Chris, 3-hour day yesterday. Good work. Scooby-Doo got live and a funded account today. Good work. Let's go. Lee, what's up, brother? How you doing? In the downside move here off the open. See if that ends up sustaining itself. Again, any move right into the open or directly off the open is very hard to trust. It's mostly going to be institutional orders for the first few minutes after the open. These bears trying to take us lower. We're really only 40 points out, by the way, from the break-even point on the Nasdaq, so we're red 0.2% right now. We're really not seeing a big net move overnight. He's back. Quicksilver's here, so be ready for a 4% down day. What's up, Biker Pilot? Member of the channel. Welcome, brother. How you doing? All right, let's see what we can put together here today. Twelves, good morning. How you doing? Good to see you. All right, man. This is good to see. I'm in a good mood today. Look at that range. Look at the range bars. 62. What was this one here? 83. That's good to see. those range bars, we haven't seen that in a little while. It's been a little while since we've seen ranges of that size off the open. So that's very good to see. For context here, the range has been very low off the open lately, and it's made our job that much more difficult than it already is. But man, yesterday, so on yesterday's stream, first trade, we're dealing with some low volatility. It's all right, but it's hanging out below 25, which you guys know is kind of like my minimum to trade completely freely. Below 25, I start making some adjustments. Size down, take a first trade, boom. Smallish loser, 2,200 bucks in the red. That's how we started yesterday's stream. It's like, okay, here we go again. Second trade, smallish winner, like 2,200 bucks, back to break even on the day. Ended the stream, went, ate lunch, came back. I'm like, all right, I don't know. Should I just leave? Should I trade? I don't know. And I sat and watched for a little while. And all of a sudden, volatility picks up. And it really picked up. And ATR crept up into the 20s, back up into the 20s, back up into the 30s. I'm like, okay, it's going to be an afternoon. And boom, finished the day up 5,600 bucks yesterday. If you guys aren't in the Discord yet, join that. It's free. It's free. We just chat about what's going on. Zach, yes, I got two 20-point winners yesterday afternoon. Cool, good work, brother. Diesel Man, welcome back. Brandon, good morning. How you doing? All right, ATR is at 31, only a few bars into the day. Good, let's see if we can hold this here. That's what we needed yesterday. Steven, good morning. Welcome. Either way, you're here, man. Yeah, yesterday's big dump off, that was what we needed. That was very good for us. There's always two sides to that fence, right? You see, when volatility's dead, you see a big dump in the market, it helps us. Typically, we end up making more money when volatility's good. We want good we don't want crazy volatility, 400-point bars. We want good volatility, it helps us a lot. Quickest way to get that is to see a quick little dump off in the market, so... Again, two sides to that, because it's not great for the country necessarily, but it's short-lived. All right, we're break-even on the day here for the Nasdaq. There's the break-even point right there. Plus or minus 5 points. All right, we're into 840 territory. Let's start looking. Let's start looking. Thinking I want to do a little bit of scalping today. Obviously still on the lookout for our core backbone trades, but ideally let's start mixing some things in here. Volatility's up. My win rate yesterday afternoon was stupid good. My win rate in the morning lately has been honestly a little below my average. I mean, you guys have seen it's been kind of a weird market. I don't want to be the guy that just blames the market, but for the way that I trade, man, I think for a lot of people too, it's been tough. Been able to tread water more or less. in the morning the last like week and a half. But compared to the previous 6 weeks before that, man, this has been like nothing. Those 6 weeks before the last week and a half or 2 weeks, those were pretty good weeks as far as the market's concerned. Then something shifted. I think it's that pesky 21.5 region. That son of a bitch. But hopefully we can get kind of clear of that and not deal with that too much here today. Carry some of that volatility from yesterday afternoon into the day today. Brandon, good morning. How you doing? Rufio, good morning. Rufio, I feel like it's been a few days. Where you been, man? I feel like we've been missing you. I'm not sure. I can't remember. Keeping my eye out here for little setups. Now, the setups you guys are used to watching me look for on stream, those are going to be like backbone setups, okay? Now, you got to remember, in videos from, feels like 2 years ago, maybe 2 months ago, there's a lot of little quicker scalps that I'm into, so let's see if we can toss some in here today. Now, obviously, the backbone setups, those are going to be more like A quality. The little scalps, this is just natural, by the way, for the market. The higher the quantity of setups is, quality has to go down slightly. That doesn't mean that edge goes away. If edge goes away, then I'm not into it. I'm not taking it. But higher, you increase quantity, you have to, by default, decrease quality a little bit. So my scalps are going to be B, B+, maybe A- setups. You can have an A+ scalp. That doesn't work as much for... I feel like we need a word in between scalp and swing. The 40-40, like continuation trades we've been using lately, I would not necessarily call those. Some of them have taken a while with volatility down. 4 weeks ago, they were quick hitter scalps, 40 points. But man, lately it's been, you know, you enter a 40-point trade and that average trade duration can creep up over a half hour. I still wouldn't call it a swing. But either way. All right, we got news here at 8:45. Again, we got U.S. S&P Services PMI flash and U.S. S&P Manufacturing PMI flash. Little reminder there. So about 25 seconds out. Let's see what we get there. All right, so U.S. S&P Services PMI. Uh-oh, there it is. U.S. S&P Services PMI flash. The forecast was 51, came in at 52.3. For the U.S. S&P Manufacturing PMI flash, forecast was 49.9, came in at 52.3. So you see that we get a little bit of wiki volatility, not much. Kind of like just how we talked about. It's gonna move things, but not like crazy, and then it'll die. So 14 minutes out now. Last headline of the morning, at least scheduled headline, We have U.S. existing home sales. Forecast for that is 4.1 million. That won't, it shouldn't move things much. Probably a little bit of wicking, but not much. Rangebreaker says, you trade every day, no days off? I trade every day. I show up every day, knowing that every single day could be... I mean, listen, you don't really know. You show up, it could be the biggest day of your career. You could say, well, it could also be the worst day of your career. All right, well, I'd prefer not to think that way. If you're thinking that every day, then you shouldn't be trading at all, probably. But I show up every day, and if the market... If we open and 20 minutes later, ATR is at 8, I leave. But that doesn't happen very often. Usually if that ATR is gonna dip below 12, below 10, that's where things start working less well for the way that I trade. It turns into Asia session. Then I leave, but I show up every day, yeah. I don't want to take days off, man. I just like to trade. I don't know how else to say it. I think a lot of people don't really understand. They're like, well, yeah, but you're here like to make. Well, yeah, like obviously I want to do well. I want to make money, but I love to trade. So I don't want days off, man. I'd rather be here than golfing. I'm not really a golfer, but you get the point. Joseph, switch from minis to micros. Best thing I ever did. Best thing I did. When you said go big, I took that to heart. Got humbled. Happy I did, actually. Yeah, listen, when I say trade small, I do not mean at the expense of going big. What I mean is the best way to go big is to trade small. I know it doesn't make sense, but like we're talking trading prop, right? So the best way to trade prop big is to have a bunch of accounts and trade small-ish per account. You don't have to trade tiny, but even one mini is too big for most of these prop rules. But when I say go big, I think a lot of people are like, well, go big, but you're telling us to trade micros. Yeah, man. You gotta outsmart the marketing gimmicks of the props. You gotta play their game. You gotta be one of their winners. They need both. If they don't have winners, they don't have a carrot to dangle. But if they don't have losers, they're out of business instantly. So it's a balance. Pick the right side. Find your edge. Trade small. Then scale horizontally. Well, you said it, Terry. It's volatile, but it's going absolutely nowhere, at least so far. So you see this is a tiny little wedge, a single bar wedge, kind of collapsing on itself. We have doji candles all over the place. Let this thing break. Because it will. It will break. Here's a little attempt at a break. Interesting. That was scout mentality. See if we can get a nice little high close. We'll stay a little size down here to start. Now again, when would I size up a little? When we get a traditional core backbone setup. But little scalps, again, I think exponential bet sizing makes all the sense in the world. When you have reason to believe your edge is a little bit better, you quote-unquote bet more. So let's see here if we can get a nice close, near-ish the high. You guys, so here, take a look up top here. You guys see this? Popped out a stop limit buy, and we opened and popped through instantly and then pulled back. I'm gonna cancel because I want to catch it on the first pop through if we're able to do that. Sometimes it's kind of tough when you're using stop limit buys. This is why technology can be so helpful, because I know that on NinjaTrader, I've looked many times at programming it. It's not so easy to, because there's still a manual aspect to this. Yeah, that would have been a nice little trade, just missed it. It was a little too quick. What I really would love is to have a hotkey where, yeah, I think have a hotkey where when the bar closes, I hit it and it reads the high of the bar. It double checks to make sure the bar is closed. That would be this bar, right? And then it places a stop limit buy one tick above the high of the bar. But it only does so if this hasn't already popped through. So you get the stop limit buy ready. I'm ready to place it. Closes, rolls over, pops through instantly, gives me no room to place it. It pulls back. I'm not going to place it on the second retest because now all the probabilities have shifted. It's a completely different trade. Beautiful close. Beautiful. Oh, man, beautiful close. It was a little too slow. That's okay. All right, let's keep watching this here. See if we get a nice third bar in this sequence. John, the biggest change for me with your influence is not judging trades on win or loss, but rule break or not, and tracking my data. Night and day results for me. Listen to John. John has found the secret. Good word. All right, now remember here, we got U.S. existing home sales, or we're getting that at 9 o'clock. That is 5 minutes out from now. So if you're in a trade or looking to grab one, just know that we might see a little bit of wicking around 9 o'clock. Totally normal. Probably, unless the number's insane, probably won't be too much. Lee, now that I've managed to get over the flu in May, I am back on indicator development. Just posted in Discord about the first one, aka the Nico indicator. Plenty more to come. Well, cool, man. I gotta check that out. What does it do? I gotta take a look at that. If you haven't, you can join the Discord for free. It's straight up just a hangout spot. There's nothing in there to sell you. But Lee is building out some indicators. Give everyone a hand. All right, 45 seconds out here from the close of this 2-minute bar. Goodness, look at that push. Look at that push. All right, we got 2.5 minutes until there's news here at 9 o'clock. Again, that's U.S. existing home sales. Going to contribute a little bit of volatility. It's not, again, it's not going to be big. All right, we're back. U.S. existing home sales in 1 minute and 22 seconds. And be ready for a little volatility. Let that clear. 30, 60 seconds of movement tops. All right, here we go. 20 seconds out. Let's see what we get. And looking at that countdown timer, that's 10 seconds out. $4 million. Came in right at 4 million versus a 4.1 million forecast. You can see that top three down, U.S. existing home sales, 4 million, 4.1 forecast. And this is coming from Financial Juice. No affiliation. I've just used it for years. They have a free version too, which is cool. All right, back to it. 40 seconds in, and any wiki volatility is pretty much gone here. So from here until the end of really the morning, we can trade pretty freely. Again, next piece of scheduled news is at noon Central Time. That's 1 o'clock Eastern. White House press briefing. What's happening then? All right, so we're in a little bit of a, I would say, a buy the close trend. At least the early stages, we're not really getting substantial pullbacks, at least not yet, out of the bears. So I'll get a little small scalp ready here. If we can get a decent close, which is necessary. Otherwise, I can't put it on. A bit of a pullback. Gotta cancel. Can't put that on. Again, looking for a better close here. Less of a wick. You're on that 2-minute chart. Bar by bar. Take it bar by bar. The beauty of taking small little scalps in between the more backbone setups that you guys are used to seeing me do lately on stream, the beauty of it is you take it bar by bar, and with the backbone setups, we're never really more than 4 to 6 minutes out from a good setup. With scalps, we're really never more than 2 minutes tops out from putting a trade on. So I think it keeps you locked in, but I do think it's smart to size down a little bit on these. Use your smaller size. Zach says, what's your risk reward on these? Or reward to risk. I'm going to automate. I'm going to leave it automated because I don't want to mess too much at 40-40 to start. Understanding that if I get a big wick immediately upon getting filled, I'm fine with that total risk. But it'll be adjusted. It'll be adjusted trade by trade. As far as management is concerned, since these trades on the quality list slightly fall, they're managed a little bit more discretionary. Okay, because it's not like you guys are used to seeing. Hold up. Gonna get a stop limit buy ready. If we get a decent close here, I'll place it 1 tick ahead. Okay, so I'm sitting long here now at 1575. If we can't get these bulls again, this is kind of a, at least currently, we're in a bit of a buy the close trend. So now let's see if the bears step in. I think scalps have to be managed a little bit more discretionary because a lot of times your probability and reward to risk is going to look different than on like the A setups. At least for me, it does. So for example, I might cut a scalp sooner, more frequently than the protective stop or the total stop, which might be at, 20 points, 40 points. And as far as taking profit, it again, it depends on the trade. But I'll have a protective stop out, and then you kind of manage it as you go. And if it doesn't need management, then you let the bracket orders work. All right, low of the previous bar is at 286. Okay, so I'm watching the low of the previous bar. Now again, I wouldn't manage just below the low of the previous bar, but in a buy the close market, when you're looking at scalps like this, I'm not really interested if we do see relatively substantial, I would say about 10 points of dip below the low of the previous bar, because you really shouldn't be seeing much of that at all in a again, this is not a super strong buy the close market, but I would not say this is a pullback market. Okay, now the bears are trying to pull this back, so if we end up seeing a dip, I'd say about 10 points below the wick of this bar here. You're on the 2 minute here. Let me give you a better view. About 10 points below the wick of this bar here, I'd slice this. Cut it. Let it go. Move on. That's that's kind of the management strategy here. All right, about 5 points in the money. All right, I've got a take profit currently set at 21,335.75. We'll see if we can get the market up there, pushing through there. Again, now my full size on like the A setups that you guys are used to seeing, that is currently, this is about half of that size total. Okay, so as far as open P&L, this is where we currently sit. Okay, but I'm only a few points. I'm like 9 points in the money, 8 points in the money as we currently said. So let's see if we can get a push up toward 35.75. Hit us out here. All right, low of the previous bar here is at 95. 95 even. I'm watching that low of the previous bar. Again, I think cutting these things right below the low of whatever bar is previous to the current bar, I think is a little bit premature, at least in my opinion. But it does tell you a story. Okay, now we still have not dipped below a low of any previous bar here on this little what was a buy the close trend is starting to see a little bit more mixed, but I still wouldn't change my stance on that. So we're about 7 points in the green as it currently sits. Alan, what's up, brother? How you doing? Good morning. All right, testing a dip below the previous bar's low. Okay, so I'm watching that. Previous bar's low is at 98.50. Okay, so keeping an eye on that. Gotta watch that. Looking at about the distance of a scalp below this previous bar's low. Still not quite there yet. Being damn close. All right, I'm going to cut that there. Okay, so we'll cut that off there. So I'm now sitting flat, baby. All right, let's keep watching here. Now, again, if you're just joining us here, volatility is up. So we are still watching for our backbone setups, and we're mixing in our size down little scalps, which is good. Keeps us more active. Yesterday, man, finally it was good to be able to mix those in yesterday afternoon once volatility picked up. Yeah, Chris, we're going, actually it's a little, yeah, it's about half R. It's about half R on these little scalps here, but still keeping an eye out for our regular setups now. All right, we've got 16 seconds left here on this 2 minute. Got a nice clear morning here. Again, as far as news, we have 3 hours with nothing going on, which is good. Which is good when we already have the volatility we kind of need, right? I mean, ATR currently is sitting at about 30, 35. That's the highest ATR I think we've seen in a couple of weeks. All right, we've got about 17 seconds here left on this 2 minute bar. Now, as far as the open, we got to keep an eye out on that 50% retracement. And you get shorts from this little chop getting stuck, averaging in as we pull back to around 50%, 40 to 60% retracement of the full move. You start getting those shorts covering at break even, which can be enough to flatten things out. So you gotta be careful. Fear and Greed Index coming through. Again, not that it helps us too much, but it's interesting to look at. 68 out of 100 indicating greed. Which, I mean, listen, I gotta tell you, when I look at that daily chart, I'm not sure I see a whole bunch of greed. I see a whole lot of indecision, maybe. But that's really about it. You see these wicks stepping in? Smaller, shrinking bear bodies. Now, if the bears can come through and wipe them out, all of a sudden we're back to that mentality. But a lot of times, you see the bulls just step in and try. They try to push it up out of the hole. Now, whether or not they succeed, that remains to be seen. But there we go, a nice little attempt at a push. All right, 47 seconds left here on this 2-minute bar. Oh, keep an eye. We're watching that 5-minute 20. Top left of your screen, that bluish line, that's the 5-minute 20 EMA. It does have a lot of psychology around it. People do watch it. Which, again, is the only reason why I care at all. Was the rollover? We're getting wicks. Still getting wicks here on the 2-minute. Mario, good morning. How we doing? All right, coming in now for a test of that 5-minute 20 EMA. You see these tight little, on the 2-minute chart, that those tight little channels, there are wicks, but those tight little channels, you end up in a buy for any reason market and curl over right into a sell for any reason market. Well, I mean, for any reason. So you can sell the rollover with varying degrees of pickiness. I tend to be a little bit more picky. You can sell below any bar. Just price action trading. Big old wick on that bar though. Small shrinking little bear body. Testing that 5-minute 20 EMA yet again. Let's see if the Bulls end up holding this. I know they're going to try. But if we can get a nice push down through there. Again, you want, if you're going short, you want the Bulls feeling as bad as possible. Right on your entry. All right, got 30 seconds left here on this 2-minute. We're getting down through that 50% retracement zone. Bull's still trying to hold that 5-minute 20. You see, we're getting hung up right around that 5-minute 20. Again, a lot of people are going to watch that. So when you're in a bear move like this, bulls are looking for any reason to buy. You're going to have stubborn bulls. You're going to have stubborn bears on any move. So like this, you know, bulls are looking for any reason whatsoever to buy. This is a very popular EMA, the 20 on the 5. And that's going to be a reason until the bears are able to take it out if they can. See here, this has turned into a little flat bottom on the 2 minute. Those flat bottoms, they like to break, right? Now we're kind of right in that 50% retracement zone off the morning move. So let's see if we end up going sideways here. I prefer to pick a direction, but either way, I'm cool with it. Just a look at the 5 minute, by the way. If that most secure, let me zoom in a little for you. If this current bar is able to get a nice close above that previous bar's wick, that's going to tell us a bit of a story here. Now, again, I will take setups on the 5 minute as well as the 2 minute, even though the 2 minute is kind of my primary chart. But what you don't want to do is take a trade on one time frame and then start making decisions while you're in it on a second time frame. A lower time frame is not a great move. Manage your trade on the same time frame you took it on, ideally. Otherwise, you're going to confuse yourself. A lot of wicks here. Market trying to decide which way to take this thing. All right, we've got about 50 seconds here until the close of this 5 minute bar. So this is a 2 minute chart. there is a 5-minute chart. I'm watching that. The bear's wicking it back. I would need to see a clean close here out of the 5-minute chart to really be interested in taking a trade off of this time frame, at least right now. Gonna get the 2-minute rollover here in 5 seconds. Very wicky here in this tight little up move. All right, watching here on the 2-minute. You see this? We got a minute 10 out. Bear's trying to curl this back. That 5-minute 20 is kind of an issue for us here, huh? Got a flat bottom there, though, on the 2-minute chart. Let's see if the bears can take this down through the 5-minute 20. That would open things up. Let us put on some more trades here. There's a 2-minute. There we go. Now we're going to push. All right, we got a minute 20 out. And the rollover on both the 5-minute and the 2-minute chart. $52 seconds. 20 seconds. Come on, Bears, take us a little bit lower. Bulls are wicking this back up. Holding that 5-minute 20, man. You're ready just in case we do get something. Rollover coming in 3 seconds. Well, nothing on that 5 or 2 minute bar. All right, I will be back before this bar closes. Don't go anywhere. Up 1 second left on the bar. What'd I tell you? Back before it closed. All right, we're still in this little sideways channel here. Well, I'm interested in this little channel here if we keep developing. I know the bulls are watching that 5-minute 20 as kind of the lower region, and it's slightly ascending, which would turn this channel effectively into a wedge if the bulls can't hold that, which is fine as long as it remains wide enough. Dan, yes, it's 50% on Apex. You missed 80, man. You missed it, brother. But Take Profit Trader is still 30% off, no activation fee. Code BIG, baby. Best deal always. But yeah, Apex right now is 50%. But still single day pass. I have bought accounts at Apex when it's 50, just because the numbers still work. But it's not 80. But if you need an account, 50 is still cool. I mean, look at this battle here. The bulls are not going to go down without a fight around that 5-minute 20. But we got to see the bears take it through. That's the quickest way to get us to a setup here right now, is seeing the bears take it through. You guys can see we've got a flat bottom here and a little descending resistance. Yes, we have a 5-minute 20 EMA. But I'm just trying to see if I can structure something that makes sense. far as a trade. All right, Bears, let's take this baby a little bit lower now here and break out of this little range. Bulls or Bears, I don't really care who, to be honest with you. Please don't play around that 5-minute 20 EMA all day. Nico, what are your thoughts on other candle styles? I think you should just stick with what you learn. What you first learned, you have the most experience with under your belt. I do not believe there is inherent edge to using one or the other. The edge comes from your setups and management and discretionary decision making. So whatever you learned first, stick with it. I know traders that can't even read these charts because they use a particular style of candle that I can't really read. I mean, I can read them, but I can't know what's going on immediately by looking at it because I don't have experience with it. They look at this chart and they're like, what the hell am I looking at? Lots of ways to do this. There's no secret. There's no best secret time frame. There's no, well, I'm not making money because I'm not using, Bookmap, or so-and-so uses this style of candle and they make money, so I need to switch to there or else I won't make money. It's just all bullshit. The money is made from making decisions with slightly higher probability at a 1-to-1 reward to risk. For example, there's a million ways to make the numbers work. All right, bulls are testing this little low, flat bottom here. There we go. There's an attempt at a push, taking out a few stops. Beautiful. All right, we got a minute 48 here until the close of this 2-minute bar. Let's see what we get. I'm also watching this 5-minute, by the way. 5-minute bar. All right, 45 seconds out here from the rollover of this 2-minute. Eight seconds. Give it 15 seconds. Ideally, a small little return to at least to close the previous bar. There we go. Take a little stab short, sitting short on a smaller scalp. Average price, by the way, is 180. We're making a bit of a push here. Pulling mom back a little bit. Again, I'm sized down a bit here. Only a few points in the money. Bulls trying a little reversal sequence here. You see that wick up out of the bottom of that shrinking bear bar. Big old bull push here. All right, I'll get ready to manage this if I need to. And yeah, I'm going to cut that there on the retest. All right, let's move on. Well, a good trade so far here today. That one just had to cut it. Back up into that range, by the way. If we end up going sideways in that range, then we're probably going to have to resort to limit order scalping, which is not a resort, by the way. It's just a switch up. But we'll see if we end up in this little sideways region here. When you look at the daily chart, right, bottom of your screen, it's no doubt the market's in a range. Okay, so when the market's in a range, it's kind of common to see that. You get breakout attempts like that, pushes, and then sometimes, this is not so common, that you get a really, really aggressive pushback. But you do get this more often in a range market than you would in a continuation or a trend market especially. But a trend market's only going to be 10, 15, maybe 20% of the time at best. ATR, by the way, currently sitting at 34, so it's holding up, which is a beautiful thing. We've seen ATR this time of day for the last like 2 weeks. ATR had been maybe 21, 19-ish, so it's 34.4 right now, which is a beautiful sight. Now, really what we're watching here now, 2-minute chart, top right of your screen, that chart. Do we end up trading sideways in this little range that was already defined? Or can the bulls push us higher up through this little wick top? That would tell us a bit of a different story. Corey, what's up? How you doing? All right, you see this little shrinking bull body here. This is a better look. Very representative. I mean, a range market, right? The bears are stepping in, trying. They're saying, well, we're heading toward the top of this little range. Step in, limit order scalp. I mean, you can see the bulls are they're trying to break this thing out, but struggling to do so. Whole bunch of wicks, whole bunch of shrinking bodies. But they're trying, man. I gotta let them try. All right, back in 2 minutes. back, baby. We're still kind of in the sideways little range. This thing's changed a little bit. We now have a bit of a double top with what I would call... I mean, I would honestly be tempted to not include this. We're looking at the actual range, because effectively all we did was attempt to break out, fail, pop right back into that little range, and kind of reform the same range. So yeah, 5-minute 20 EMA is still very relevant psychologically for people. Apparently. I gotta tell you, if people didn't watch it, it would be off my chart. I just don't care. It's only relevant because other people watch it. Self-fulfilling prophecy, that's all it is. That's it. Starbucks says, one time you told me the best place to trade stocks is to find where the attention is. That's definitely true, and I think that's most of what indicators are most good for. Yeah, listen, I don't care at all about what the indicator is representing. All I care about is what it's representing relevant to nearly everybody? And more importantly, do people actually use said indicator? If both of those things aren't true, it has not earned its spot on my chart. I just don't care. It needs to be real. I don't get it, man. Everyone's throwing up like clouds on their chart. They're like, this is gonna be the one. Come on. Unless every trader damn near has it on their screen, I just don't care. It means nothing unless that's true, which is why the 5-minute 20 EMA will oftentimes see respect. That's a little bit too much to be coincidence, right? Because damn near everyone who watches a 5-minute chart has it put up. That's why. All right, it looks to me like this channel is starting to widen out, which is good. Jeremy says, isn't volume-weighted average price the most commonly used indicator? Yes, I would say it is intraday. However, the reason you might say, well, why don't you throw it up then? I throw up the volume-weighted average price on small cap stocks. But for me, on futures, Let's go back to the coral reef versus middle of the Pacific analogy. If you are in a sailboat, let's say you're sailing, and you're going over a coral reef, and you have a depth finder, are you going to be taking depth over a reef? Damn straight, unless you're looking to get lost at sea. If you're in the middle of the Pacific, probably not so much, right? It's just, it takes too much mental capital to pay attention to that when you're trying to sail the middle of the damn Pacific Ocean. So you don't pay too much attention to depth, probably. Let's say you're a single man team. Same thing. Futures versus small caps. Small caps is the reef. I gotta watch volume. It's everything. In futures, the market is so deep that I prefer to not allocate too much mental capital toward looking at things that represent volume specifically. Which is kind of the primary difference between like volume weighted average price and a 20 EMA. Obviously, volume weighted average price is going to have more emphasis on volume itself. Now we're getting a potential continuation setup here, but I gotta tell you, we're also inside of that little range, so I'm kind of watching both. Right, there's the roll over there. Right at the top of this little range here. Again, that's quite an aggressive flat top. See if the bulls can tempt them enough. And flat tops, eventually, they do tend to break. Unless the other side snaps up first. When you have a wedge, the ascending or descending level tends to be slightly, now I mean slightly stronger than the flat top or bottom. You can really see this flat top is really, really holding well. Again, you guys have to understand that in a range market like this, betting on a straight up breakout before you get confirmation, I think in a range market like we're seeing, again, daily chart, bottom of your screen, that's a really, really tall order. Okay, because right now I'd say probably about 90% of breakouts are failing, whereas in an average market, it's gonna be more like 80% of breakouts are gonna fail. So in a range market like this, you get a lot of pressure from the opposing side on the edges, so to speak, of the channel. That doesn't mean the channel can't shift over time. It'll shift. You can see, oh, it's flat. Now it's descending. Now it's ascending, which means that you broke a high, broke a low. It doesn't necessarily mean that the breakout succeeded, though. It means it partially succeeded before failing. You're trying to press the little outskirts of that channel. Bulls trying to break it out. Bears are going to step in ahead of that and try to curl it. They're going to try. I mean, they're going to succeed? Not necessarily, but again, breakouts are succeeding about a 10% rate in this current market environment. See that? Each time we're getting a press of the little edges of this channel here, which looks to me like a little ascending wedge at this point. One second. All right. That's what happens when you get margin called. My alarm's going off. All good. We should be all good. Hopefully it won't go off again, but I think we're good. All right, still within this little range here. You can see on the 5-minute charts, I might want to point out to you guys, that 5-minute 20 EMA, the more and more and more it gets tested, it does tend to lose relevance slightly. And you can see here, it's becoming less and less relevant. It's still there, but we're now starting to straddle it rather than respect it like we were seeing maybe an hour ago. Which makes sense, right? Any level, the more and more and more you test it, usually people start to lose interest. Which is not a bad thing, by the way, because I'm not taking trades off the EMA itself regardless. So for it to become less relevant, I would actually prefer that, so it's a good thing. So we're trying to reclaim these highs. All right, good. Widening out this channel a little bit, which is good to see here. See if we can push this to the edge, widen this channel out a little bit more, and really define this into a little ascending channel. That'd be good to see. Big ol' wick, man. Seems like the bulls want to test the little outskirts of this channel. You can see it's starting to expand in both directions, to the upside and the downside here. Which is not a bad thing. I mean, ATR currently is sitting just below 30, about 29, so it's holding on. Now, this time of day, for the past, I'd say 2 weeks, at least week and a half, ATR has been more like 20. So, a good improvement here the last few days. Well, I should say, starting yesterday afternoon, really. All right, outskirts of this channel right now, we're looking at about 270. Maybe just a slight push through 270. Well, you know, the action, we're inside of this little channel, but I gotta tell you, ATR. I mean, yeah, I can tell that people are kind of are bored with this price action. But ATR, you know, we should be counting our lucky stars, because that's holding on 18. That last bar was 15, a 15 range. But the average true range is holding on. Much better than it was this time yesterday. Vinny says, Wrench, I just want to say I've made minor modifications to your 2-bar, 3-bar continuation plays, and it's been wildly successful. Thank you for sharing your setups with us. See, Vinny's got the right idea. I don't want you guys to just come on here and try to copy me because we don't share the same brain. The discretionary decision making is going to be different. So, Vinny, good work. If you want to take inspiration from one of my setups, I don't care. If you want to trade a completely different way, fine. Just find your edge. That's all I care about. Joseph, how do you best understand market sentiment? Is it a higher time frame momentum? I don't care about market direction at all. I don't come in with any bias any day at all. Zero. I don't care which way the market goes. All I care about is that volatility is good enough and the price action is offering me enough setups. That's all I care about. Now, the way that I think about market sentiment, Joseph, to answer your question in a real way, is not directionally. I think about it in terms of market inertia. Okay, so I'm thinking, is it trend or range or mix of both? And to do that, I just look at the daily. Just look at the New York session on the daily. That's it. Small little bodies, a lot of sideways action with big wicks. Range bound. What do the big wicks tell you? Well, you've seen a lot of breakout attempts and they've failed. Right? Now, if you see a lot of consecutive clean bull bodies in a row or bear bodies in a row, boom, maybe you're in a 10, 15, or 20% of the time when the market inertia is trending. A trend market is one of those markets where you go on to like StockTwits and you click on SPY and everyone in there is like, man, SPY's been up 6 days in a row. There's no way it goes up 7 days in a row. Loaded the boat on puts, and the next day it's up like 6%. That's a trend market. And you got to trade it a little differently. You got to trade it like a trend market. A little bit less confidence in channels and a little bit more confidence in continuation. Slight adjustments. Chris B, good morning, Nico. I signed up for Take Profit 3 hours ago, and my data feed is still pending. I signed everything right away. How long did your accounts take to go active? Hey, Chris, I assume you're talking about a test account, right? Lately, Take Profit has been... Here's just the reality. First of all, the reality is you should be using code BIG to get the best deal always. And the second reality is that Take Profit has been growing. I think they're like the fastest growing prop. Probably for good reason. I like them. But they're backed up, man. Their customer service has not been as fast lately. Even since I started, it has gotten a little bit slower. I think over at Take Profit, they are just scrambling because they have more people than they can even really handle right now. And the data feed, yeah, they're taking longer to activate. Mine were very quick, but I think that's because I signed up for my current Take Profit accounts before maybe the growth exploded the way it has. But I've heard of this problem a lot where it takes your accounts a little while to go active, but I haven't heard a problem where it just never activates. I've only heard of delays. But I gotta tell you, is it... I think the problem has mostly been people first-time users. Because it seems like accounts that are being added onto existing users who already have, let's say, like Tradeovate set up, it doesn't seem like they're having problems. Okay, thank you, Chris says. I was just concerned because the help article said as quick as 5 minutes. Yeah, it's taken longer than that for a lot of people lately, and don't worry. I sued. Don't sue the code. Use the code. Big baby. Just lean into it at this point. But yeah, make sure you signed into Tradeovate. If you've already done that, you just gotta hold out. I've heard it taking as long as a few days for some people to activate recently, but once you add more accounts, again, once you're already a user, you should be good to go quick. You can see there's still a range market for sure. Kind of bouncing back and forth here. Now the thing with range markets like this is we can go from descending to flat to ascending pretty quickly. But right now, things seem to just be widening out in both directions. Which is kind of like the reverse of a wedge, right? Michael, small short scalp on that little flat top. Yeah, a little ascending. Yeah, it's kind of a flat top ascending resistance. All I can get today. Small win. I'm out. Thanks, Nico. All right, Michael. We'll see you. Well, ATR is still holding on. We're at 25.26. Benitez, what's the view? I'm a new subscriber, just joined. Welcome. Hope to see you become. We have lots of regulars in the chat that are here every day. Hope to see you become one of them. The view right now is that this baby is a little flat bottom. I would say flat bottom, ascending resistance, expanding wedge, I suppose you'd call it. Now, the good thing about these growing, expanding wedges is that you end up with opportunity down the line to get continuation while staying inside of the range and still have room to hit target. Now, that 5-minute 20 EMA is less and less relevant the more we test it, which is a good thing, right? Because it really does nothing for me except cause problems. So the fact that you know, the more we test it, the more we tend to just straddle the thing rather than actually respect it. I mean, average range of a 2-minute bar, again, holding 25, only 96 points, 92 points in the green on the day for the Nasdaq. It's impressive, but it's kind of a weird scenario. The range so far on the New York session is decent. It's 216 points. You guys remember a few trading days ago? Oh man, I forget which day it was. The range was 96 points, still at like noon. It's not too much of a problem here today, but we are within that little, we saw a push off the open and then an attempt at a lower move that failed, and now we're just right back in this little range. Yeah, Taz, I think you're right. I think it was Monday. Short memory. Gotta have a short memory as a trader. Tubed out, what's up? Welcome back, brother. How you doing? Yes, if you don't know, we have a long weekend coming this weekend. Not tomorrow. Tomorrow we're trading. But Monday is closed up. So after tomorrow, again, we'll be here tomorrow. But after that, then we'll be back on Tuesday. A lot of people on long weekends like this, they're like, I'll just take Friday. Oh, screw it. Let's just take Thursday off too, Wednesday. I don't think they like trading. Or they're scared to trade. Which is it? Yeah, Joseph, we're looking at starting limit order scalping here relatively soon. I want to see a retest of that wick high. Right around 21,280, just barely through there. Well, ATR is starting to dip below 25 here. Listen, it's expected this time of day. It held out a little longer than it has been the last few days, but this channel's not helping. It's also doing a lot of adjusting here on the fly. The channel, that is. But moving through the day, I am interested until this channel breaks and just doing some limit order scalping. Buy low, sell high, buy back lower mentality. As opposed to stop limit entry, continuation trading. All right, there's a nice attempt at a hard push out of the bulls. And I want to see a test up through 21,280. High of that previous wick high is 21,281.50. I'm kind of watching the low 80s. See if the bulls can make a test of that and then see how we react. All right, guys, well, I'm going to keep that rocking and rolling here through the afternoon. You guys know what I'm looking for at this point. Looking for the backbone setups and see if we can do some smaller scalping here throughout the day. Listen, hey, Apex right now, it's 50% off. It was 80, it's now 50, but it's still single day pass. I have bought accounts, I wouldn't say a lot, but I've bought accounts at 50%. Obviously, 80 and 90 is better. But if you need some accounts, I don't think there's anything wrong buying them 50% off. The numbers still work in a big way, at least my numbers. Take Profit Trader, though, is by far the best deal right now. It's 30% off and no activation fee. The activation fee, don't be psyched out by the 30%. You're like, well, Apex was 80. No. The activation fee takes off over $100 once you pass the test. So if you have reason to believe that you are likely to pass the test, Take Profit is by far the best deal. Use code BIG, B-I-G, best deal always. All right, guys, I'll tell you what, I'll be live tomorrow morning to finish out the week, heading into the long weekend, 8:15 a.m. Central Time. If you have not done so already, subscribe to the channel, like the stream on your way out. That'll make your life easier when you open the app tomorrow morning. It'll pop right up, at least hopefully it will, and you won't have to go searching. All right, guys, I will see you tomorrow morning. Stay patient, but hit it hard when it comes. All right, guys, have a good day.